Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is a series where we analyze and decode Nifty daily, post the markets on multiple time frames so that we are ready to tackle the next day's market with much more confidence and clarity. Now, the purpose of me starting this particular channel was to simplify trading for most of you guys. uh, what most people usually do is they will watch a lot of videos on YouTube or maybe enroll for a lot of courses and then put in a lot of trading technical indicators. And the thing is, the chart basically gets too complicated and too ugly. Say, for example, if I just turn on some of these indicators around here, super trend, moving average ribbon, Bollinger Band, CPR. And I try to understand what actually happens is the chart gets too congested, and then taking a proper call is something which people find very difficult. And as a result, they end up losing money instead of making money in the market. And that was the sole reason for me to start this particular channel to simplify trading, right? Just by looking at price, how to read price of what is going on behind the scenes, uh, and how to talk to the price action, how to read the tape properly, was my sole intention of starting this channel. And that is exactly what I am doing. I have got zero courses to sell, zero Telegram channels to promote, and there is no underlying hidden agenda for creating these videos, apart from trying to make trading simple, and making people understand price action concepts so that they are able to analyze and then come at their own trading conclusions, right? So that was the sole intention. And in case if you guys like the way I put out the price action concepts and the daily trade plans in front of you guys, please do like the video, subscribe to the channel, share it with your trading friends and community, as well as put down anything that you might have to say in the comments box, be it feedback, be it criticism, appreciation, any question. I am open to everything. I will try to answer the questions to the best of my capabilities, right? And on that note, we'll start with today's video. We'll first start with what we had planned yesterday versus what happened in the market. What did we trade? Where did we take an entry? Where did we take an SL? Or where did we take book our profits? Where did we take the hit, the trailing SL? We'll discuss everything in detail. And post that, we will come to the second part of the video, which is planning the trades for tomorrow. Now, yesterday, what we had planned was we were planning to go long above this particular high with a pullback. Now, again, I cannot emphasize the importance of pullback enough times. Uh, every time it has happened wherein the pullback has saved you from a fake breakout or has saved your capital from unnecessary over trading, I put it out across to you guys, and same was the scenario today. Market opened with a gap up. Now, anybody who would be thinking that okay, market has opened above previous day's high, let me create a long entry here. There are people, trust me on that. There are people who will blindly buy calls around the opening just because the market has opened gap up. They don't want to miss out on a move like this, wherein they can get an early entry and see for yourself. The market actually uh, came down from the day high. Day high was never even touched again. Now, yesterday, when I told you guys that this is a retracement level that we are looking at, and markets have actually given us a closing above this level, but then this does not mean that if we are getting a closing above this particular level, this resistance is now broken and now this will be a support. Please you can go and watch the video again. Uh, that is what I had clearly mentioned. Markets can still go up, gave us a closing above this, trap some more buyers, and then eventually come down if it has to come down, right? Price has to confirm everything, but this is what we were prepared for. Now, our second plan of action was to short the market below this particular again zone with a pullback. Now, this is where talking to the market or trying to understand what is happening behind the scene is extremely important. Once I have not deleted the trend lines that I had drawn in the live market so that I am better ex able to explain how I was looking at the markets. Now, after this particular big red candle and subsequent sideways price action from Nifty, I waited for price action to develop. Now, all I could see was price action is converging in a symmetrical triangle around here. One touch, two touch. This trend line had formed here. One touch, two touch. This particular trend line has formed around here. And usually, if you see, this is a kind of also can be treated as a flag and pole. So these are just names All you need to understand is yes, after giving a move on the downside, market is in a sideways consolidation. And in case of a breakout above this of and in case of breaching of this particular high, we could have initiated a long entry. But the more probable trade would be a breach on the lower side, and that is exactly what happened. So even though we were planned to enter uh, below this particular level, try to understand this is where you can understand that see market had opened with a gap up. And in case if bulls were strong, that gap up would have held, it would have sustained. Instead, it immediately went into a big red selling candle, signaling selling pressure, which might be experienced throughout the day. Now, all you need to do is look for favorable risk reward trade setups and take your positions accordingly. So, we need not necessarily wait for prices to come down around here. That is something which we were planning in case of a gap down opening and then prices giving us a breakdown below this and then a pullback. But prices, once it had opened gap up and they were around here converging on this particular triangle formation, breakdown below this, let the candle close, close, close. We needed just one green candle to short the market, and this was the exact green candle, the 1205 candle, which was there, below which I created a short around here. The initial SL was big. The initial SL was big because I always emphasize on placing the most logical SLs, right? Now, you could have placed the SL around here, but that there was a high chance that in case of some volatility in the market, that SL could have been easily triggered. Now, today, the VIX was down for a strange reason. The VIX was down throughout the day. You can see it was down 3% at around, I saw it around 3.5% had recovered at during some point. But the VIX was down, and that was the reason maybe we did not see some uh, volatility. And even in case you would have kept your SL around here, you would have been safe. But I had planned to keep my SL above this particular swing high. And as you can see, market gave us a good reward on the downside. Now I exited on this particular candle. As per the candlestick rules that I follow, I needed three conditions for me for the uh, trade to for me to be exited from the trade was uh, since this was a short trade, all we needed was a candle on 5 minutes, which had a higher low, a higher high, and a closing above the previous candle's high, which was in this particular 105 candle, which was there. And this is where I had, after the candle closing, I had exited. This was a good risk reward trade. Then again, market was slowly, sluggishly was going upward. This was again a parallel channel. If you ignore this particular trend line, and we can draw a parallel channel, right? Prices were again moving in a parallel channel in the day, and did give a breakdown. It gave a very solid, convincing breakdown. But again, we do not trade breakdowns and breakouts without a pullback. Plus, this came in after 2:30, post which I am reluctant to take a trade in case if immediately this would have reversed. I could have taken this trade, but that would have been for a very short scalp. Plus, I would have booked the profits quickly if I would have gotten them. But the markets broke down below this particular pullback of hours almost at the day end, the 1525, the last candle, right? So that was the reason I did not take this particular trade. And the only trade that I took was the short, which was created around these levels, right? The 12:10 candle, which was there, and exited around here. I hope the trade that was executed by me. I have been able to explain that to you guys and what was the rationale, what was I thinking while I was in the live market. Uh, right, you have to weigh in both the sides, right? There are two sides to the market. One are buyers, one are sellers. You just need to weigh in who is uh, in the dominant position today in the on an intraday basis, right? And this particular red candle at the start of the day was a clear indication of who was in control today. So this was a very good and simple trade that we did. Now I'll just delete this particular level which we drew yesterday. This was basically the 0.5 to 618 retracement of this entire up move which was there. So I don't think that is valid for us anymore. We will also be deleting this previous day's high from here. Now on a daily time frame, if we see, right, in case if say because Nifty had breached this swing low and created a new low. In case if Nifty is starting to go down again, and this is a higher low that has been created. So this was the retracement. It has taken good resistance uh, from good levels that we had drawn, right? And just I just wanted these levels to be here. And Nifty has kind of given us a closing around the, so this level was the 50% level, and Nifty has kind of given us a closing around the 50% level, which makes trading kind of easier for us for tomorrow. For tomorrow, a very simple trade on the downside is waiting for us below this, right? So this is a simple trading plan that we have. Say, for example, market opens flat, minor gap down, consolidates for some time. If it spends some time here before breaking this, that would be much more good and better. If it breaks it with a big flow, it gets difficult to trade, right? I'll be honest. In case if it spends some time around here, opens flattish, does spend some time above this level, then breaks down, gives a pullback, you will get a very good, beautiful trade tomorrow, right? And in case of a gap up opening, I believe the market can get a little volatile because market has closed almost at day's low, very close to the day's low, and people who would have carried shorts overnight, they would be kind of not in a good position, and that will lead to some volatility. But on a long side, for a long trade on the long side, what we can do is, because right now, see, anything is happening in the market and we will be prepared for anything and everything. So yeah, these are the levels that I was actually looking at this particular swing high, which is somewhere in between the 0.5 to 0.618 zone of the entire fall from today's high till today's low, and we'll target that only. So we'll mark this particular green candle high, and for any long entry we need to the price action to give us the confirmation above this level, right? Above this level, in between this zone, I will suggest not to trade. Markets will be volatile. I'll suggest to keep the trading plan very, very simple for tomorrow, uh, right? So I this is it, yeah. This is a simple trading plan for tomorrow. We'll look for a short entry in case of a gap down. Say, for example, what if a major news comes in and market opens with a major gap down? In that case, we will need not immediately short the market. We'll wait for further price action to develop. Most probably, markets will be first filling the gap and then maybe sideways to a little volatile. Uh, but that is something that you need to keep an eye on, and I think I have covered all the possible scenarios. So this, please treat this particular zone between these two red lines as a no trading zone, and only above and below this we will create long and short positions. So yeah, that's it from my side for today, guys. I hope I am able to add value to your trading. So do not forget to like, subscribe, and comment on the video. That would be uh, good enough motivation for me to keep creating these videos for you. So far, I have not missed even a single day. Even though I was on a 2 week vacation to Japan with my family, I still found out some time every day to put out the daily analysis video for you guys. And there is no hidden motive for me here apart from simplifying trading for you guys. So, yes, the like, subscription, and the comments would be the motivation that I am seeking from you guys. So, yeah, this is your Nifty Guy signing off for today. I will see you guys again tomorrow post the market. Have a good evening. Cheers, and thank you so much for watching.